broadcasters and this station.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive. Every walker who joins HeartWalk means more people trained in CPR. Take the first step and register for your local HeartWalk. Find your local HeartWalk at heartwalk.org.
Retirement isn't just one stage of life. It changes over time, and your home should change with it. This is Mike Armstrong from the Armstrong Advisory Group. You may have heard of the go-go years when you're traveling and enjoying the freedom you've worked so hard to earn. Then come the slow-go years when convenience starts to matter more, and eventually the no-go years when safety and support take center stage. Our new guide, Navigating Retirement Housing Choices, shows you how different housing options can fit each stage of retirement. From staying in your home to downsizing, to exploring elder life communities, you'll learn what questions to ask before you're forced to make a decision. Get your free copy today by calling 800-393-4001. That's 800-393-4001, or request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about techniques that can help protect your assets from long-term care expenses last minute. Todd, what happens to your home when a spouse enters a nursing home and no planning has been done? And is it different for single individuals?
Yeah, so very good question, and the answer is yes, it is different. So let's talk about the spouse first. When you're married, if you have a spouse living in the home, regardless of the value of the home, as long as it's located in Massachusetts, it's non-countable. And it's non-lienable. So it's really, truly protected. Now, don't leave it that way. Make sure you put it 100% in the name of the healthy spouse after that happens. However, for a single individual, it's a little different. As long as the value doesn't exceed $1,071,000. There's a number that changes every year. It goes up. Then it would be countable if it's worth more than that. If it's worth less than that and you check a box that you intend to return home, it's non-countable, but it's lienable. But so what? Getting on the Medicaid at the Medicaid rate is better than paying privately.
Todd Lutzke and the estate planning experts at Cushing & Dolan have written a brand new guide that details last-minute Medicaid eligibility. You can request this brand new guide by calling 866-848-5699. That's 866-848-5699. Or you can simply request the guide from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Paul Lane and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Paul Lane and Marc Fandetti.
Welcome to this Wednesday edition of the Financial Exchange in what has been a very busy last few days for the economy and markets. Paul Lane, Marc Fandetti, and Tucker Silva here with you. Like I mentioned, we have a lot to cover in today's program. Nvidia will be reporting its earnings after the bell. That is certainly going to be significant, much watch for Wall Street and the markets. And we also have coming up on Friday, Kevin Warsh will be speaking at 10 a.m. in the Jackson Hole Symposium. So he will have some chance to perhaps make good on some of the issues that he ran into at the last Federal Reserve meeting. So really that's where the preview starts for our program is this week, the two pillars of what is probably the biggest focus for investors in the economy are taking center stage. As I mentioned, Nvidia will report its earnings after the bell. Largely, they are anticipated to come out with some tremendous numbers. A lot of these numbers from the past quarter are sort of baked in and have already been sort of marked by analysts out there, but there will be a significant amount of scrutiny on some of the financing deals that they have announced. So any commentary that they're able to give on that front certainly will be parsed through quite intensely by a lot of analysts out there, and any commentary that they have in general in terms of what they're seeing from hyperscalers and the development of the new chips that they have coming out. So we'll certainly get into that. And then also, like I mentioned, Kevin Warsh will be able to speak on Friday, and how will he react to some recent actions by Treasury Secretary Scott Bessent, and will he make comments on some of the bond buybacks that we're going to talk about on this program that have been in the headlines for the last 3, 4, 5 days here, and what commentary will he provide potentially about inflation and his path to bring it down to the Federal Reserve's target of 2%, because he's been relatively mum on what he plans to do. That is intentional. Kevin Warsh has been very critical about the Federal Reserve over the last decade plus being too communicative, but now he's facing pushback from a lot of market pundits and a lot of the news reporters that cover the Federal Reserve for not really speaking out enough. So there's plenty to chew on here. Marc, we'll start with just your biggest takeaways from this week, or things that you're most attuned to of those topics that I mentioned there.
I haven't really been paying attention. No, I'm kidding. I guess Nvidia will be the story today.
Mm-hmm.
They supply, 85-90% of the chips used to train, so to speak, an AI model, which just means estimate a function, if you like, that can be then used to apply to other situations. That's all people mean when they say train a model. I just wanted to sort of define that. So their margin should be gigantic, wildly profitable. That's not going out on a limb, and the backlog should continue to be huge. They're going to report that everybody and their brother has been ordering chips from them. We sort of know all this because the hyperscalers, your Amazon, Apple, Meta, Oracle, who did I leave out? Microsoft. They've told us they're spending $1 trillion this year to build out data center capacity, and we know that most of the chips that run those suckers come from Nvidia. So, there's no suspense here, right?
Right.
Okay.
Right.
So the bigger question is, how do we close the gap between what they're investing and the paltry revenue so far on AI? If you're an investor.
Yep, that is definitely...
And we can't answer that.
That is definitely an area of focus. NVIDIA commands about 74% gross margins. They are likely to report that they doubled revenue from where they were last year and doubled their net income. Their financials have never been in question in terms of what the success that they've seen over the last several years. The numbers that they've reported, I just alluded to their gross margins, but the revenue and net income figures that they've been able to generate have been spectacular, and that's why they garner that top market cap position.
Unless there's like a surprise in there, like somebody canceled a big order. God forbid that should happen. The market suffers a serious setback to follow. They are it's no exaggeration to say they are the industry.
They are the epicenter of.
But they're like 90. They're effectively I was going to use the term bellwether, but they're more than a barometer, a bellwether. They are the industry. So the second they indicate that there's something wrong with demand, the hyperscalers canceled an order or something like that, but it ain't going to be for lack of capital, because they're flush with it. The hyperscalers are still, despite their dwindling cash position. That's going to suggest that demand is slowed for other reasons, and that'll send the market, I imagine, into a panic. It's like, wake me when that happens, because otherwise it ain't going to be interesting.
No, the only thing that I could point to, because besides on the numbers front, like you were saying, and I agree with this too, we're going to have a really good sense for what exactly they come in with on a revenue basis. You'd think that's pretty pinned down, but the commentary, and perhaps there won't be much in terms of what they're thinking on some of these financing buildouts, that has taken center stage and has gotten investors quite worried. There is just so much demand for compute that the hyperscalers are basically exhausting all financing sources that they have. There was, a example of Google issuing equity, which is just, something that hasn't happened that often. There has been tremendous amounts of access of public debt markets by the hyperscalers here, and then they've been burning through free cash flow as well. And so now you have Nvidia in this position where they are trying to make sure that they continue to prop up their buyers and their industry. And right now they have a concentration risk in that these hyperscalers account for, I was trying to find the figure here, I think at one point I had read, and I'll continue to look for it. It's a significant percentage of their revenue is attributable to these hyperscalers, but you want to have a diversification of customers, and what they've been doing recently is utilizing this fortress of a balance sheet that they've built up. I believe they sit on 80 or 90 billion of cash at this point in time to act as a backing for some of these other players in the AI space for financing guarantees on data center buildouts. And then there's also talk that they would act as a backstop for this $500 billion, I guess fund would be the word, financing endeavor with some of the big Wall Street firms that would kind of continue to build out this AI infrastructure, just robust demand. And so any commentary they have there, I think that would be of interest, but perhaps we don't get much.
I think they've already sort of told us. I mean, we know what's going on.
Well, we don't know the specifics of the $500 billion fund. It's rumored 25% backing, but there's no specifics there and how it's going to work and what the terms of it would be, and maybe that doesn't come from this call.
Do they typically disclose that?
I would think that we would have continue to get more information leaking, coming out from the bigger firms.
We know they've got the money. I mean, this is not really my area, but I'm still taking the sort of extreme position that this is all boring. We know the results are going to be spectacular until Microsoft can't sell a bond or Google can't raise capital. This isn't interesting. By not interesting, I don't mean not spectacular and historic, because it is. I just mean it's not going to be different than what people expect until somebody can't raise capital or somebody cancels an order. I assume Nvidia is going to frantically continue to engage in what some people have called circular financing, which is just an extreme version of vendor financing, right? That everybody does, but this is vendor financing on steroids because it's like the whole economy right now, or a big contributor to economic growth anyway.
The last 5 out of 6 earnings that they've reported, the stock has traded down, and I was sitting here trying to find a way to counter you and say, what upside could potentially come from this earnings call? And I'm scratching my head a little bit as to what would make the stock robustly rise. And again, this is just speculation here that I'm undergoing, and I can't really think of one. I mean, of course, if for some reason they were to indicate some tremendous forward guidance that would blow away expectations of analysts. That could potentially be the case, but because we have such a good sense for what the CapEx projections are from their biggest customers, I find that an unlikely possibility. I cannot really think of another scenario that would lead to tremendous upside.
No, I think it's all on the down. The risk is all on the downside with these guys.
That's kind of where
there's
I land
no
too.
suspense here, probably, unless they surprise us and say, "Oh, Microsoft canceled an order yesterday." And we're incorporating that into the guidance that you see here. Like, the guidance is different than what was expected. The results probably don't matter. It's the guidance, the backlog projections, I would think.
Well, we'll get our answer at the close of the bell today. They are going to report earnings, and we'll be covering it first thing on our show tomorrow. We're going to take a quick break here on the Financial Exchange. When we come back, I want to talk about that very important meeting, or symposium coming up on Friday in Jackson Hole, and Kevin Warsh and what he may or may not say coming up this Friday. We'll have a preview of that right after this break here on the Financial Exchange. Stick with us.
The Financial Exchange streams every day live on YouTube. Subscribe to our page and follow the markets all morning long. Only here on the Financial Exchange Radio Network.
The worst time to make a housing decision is when you don't have a choice. This is Chuck Zada from the Armstrong Advisory Group. Too often, people don't think about their next home until a health issue or the upkeep of a house makes the decision for them. If you start planning now, you can take your time, explore your options, and make decisions that fit your retirement goals instead of reacting to a crisis. In our new guide called Navigating Retirement Housing Choices, you'll learn about downsizing, 55-plus communities, continuing care retirement communities, assisted living, and the important questions to ask before making one of retirement's biggest decisions. Don't wait until circumstances dictate what you need to do. Get your free guide today by calling 800-393-4001. That's 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. One day, you're living in your own home. The next, you can't return home after rehab. Now, you're faced with a nursing home bill of more than $14,000 a month and wondering how you're going to pay for it. These situations can occur without warning, but Cushing & Dolan can help. Before you make any major decisions, get the facts. Cushing & Dolan's new guide, Last Minute Medicaid Eligibility, explains common misconceptions about Medicaid, what assets may or may not be at risk, and why the first answer you receive isn't always your only option. Call right now, 866-848-5699, and get your free copy of Last Minute Medicaid Eligibility. That's 866-848-5699, or you can request the guide online at legalexchangeshow.com. That's legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
In a heartbeat, you could be the difference.
Mark collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Our Senators Edward Markey and Elizabeth Warren and Representative Jake Auchincloss are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
Daily financial content in your feed when you want it. Follow the Financial Exchange on Instagram. This is the Financial Exchange.
Subscribe now to our YouTube page where you'll find interviews, highlights, and full shows of the Financial Exchange. You'll get caught up on anything and everything you might have missed right here on the Financial Exchange Radio Network. Just search the Financial Exchange on YouTube and hit that subscribe button.
The two biggest events that the markets are focused on this week are Nvidia's earnings. We talked about that in the prior segment, but of course the next biggest one would be Fed Chairman Kevin Warsh, who will be speaking at the Jackson Hole Symposium Friday at 10 a.m. And this comes off of a backdrop regarding one of the biggest stories in the financial markets over the course of the last 4 or 5 days was Scott Bessent and the bond intervention that the U.S. Treasury sort of undertook on Friday of last week, I believe, in which it was announced that they would double the Treasury purchases from $2 billion weekly to $4 billion from September through right around the midterm elections. And ultimately, the attempt here is to try and eat up some of the supply for longer-term bonds, and as a result of that, create demand in order to drive up the price of longer-term bonds and thus driving down the interest rate yield on those longer-term bonds. The U.S. 10-year Treasury is the bellwether or benchmark that is used for a lot of lending in the United States, whether you look at 30-year fixed mortgages or if you look at vehicle loans. And Mark, I haven't had a chance to talk to you since this occurred. To me, it was very confounding and just seemed like a move that will be futile and does more harm than good in terms of trying to achieve their goals here. But curious your thoughts.
Yeah, so the immediate objective was to get longer-term rates down ahead of an election. I assume the timing is not a coincidence. A lot of governments try this type of intervention. They intervene in currency markets. They intervene in debt markets. Japan has been artificially suppressing the yield on its longer-term bonds for years and years. Eventually, though, the chickens come home to roost because the problem is not a lack of fancy financial footwork on the part of your finance minister or treasury secretary, and Bessent knows this because he made a living thwarting government's efforts to do exactly what he's trying to do right now. He did it in currencies, but it's the same sort of principle. The problem is borrowing. That's why long-term interest rates are high. So to intervene in the very short term would be like, faking your cholesterol test, if you could do such a thing. I don't think you can. If you know a way, please text the show. But
617.
But you wouldn't do that. It'd be stupid. It'd be self-defeating. When markets push interest rates up, equivalently sell long-term bonds. When investors, when demand for long-term bonds is the way I should put it, wanes, it's because investors are concerned about what the government's going to do in the future to meet its obligations. Are they going to print more money to meet them, for example? If so, that reduces the purchasing power of the coupons I'm going to get over time. I don't want to buy those bonds. So by suppressing or distorting, however you want to think about it, market signals, it ironically delays the type of reforms that are necessary to get interest rates down in the long run. A good example of this is what George H.W. Bush and then Bill Clinton did in 1990 and 1993. They bit the bullet on tax increases. It was more of a bullet biting for George H.W., I think, than Clinton, because he was probably a little more averse to raising taxes, but he eventually did. Those two pieces of legislation righted the U.S.'s fiscal ship, and as a result, long-term interest rates came down throughout the 1990s. There are other forces at work. This was a global phenomenon. I don't want to overstate the case, but it's widely agreed that those measures helped to get interest rates down and helped facilitate the internet boom, which relied on borrowing.
Right.
My point is, you need long-term structural reforms here. Only Congress and the president can do that. Little gimmicks, you called it artificial or futile. And you're right, and Bessent knows this. He was probably under pressure by the president to ahead of the election.
Certainly seems
That's
that
the
way.
only way that makes sense of what is otherwise inexplicable. It seems almost stupid, but he's not stupid. Again, he invented exploiting the stupidity of George Soros, and Druckenmiller, the great
some of the most star-studded investors that you've
all
had.
on the same team,
Yeah.
by the way. But they executed some sort of famous trades over time that made billions and billions, exploiting or betting that the government any government can't outspend the markets forever. It's true the U.S. government can print money.
Yep.
But markets have a virtually limitless supply of capital to bet against government stupidity. Again, Bessent knows this, and he was probably under political pressure to do what he did. That said, it did get long-term rates down a little bit.
It did. It did bring them down a bit. I thought you did a great job of kind of giving the overview there. Really, the big structural issues for listeners out there to understand is that, these weekly bond buybacks, typically the Treasury will intervene from a liquidity standpoint when they have these periodic auctions because they constantly need to raise debt because we spend more as a country than we take in for revenue. So there's this constant need to issue additional debt. And when you will see the Treasury typically step in on these auctions if there are issues from a liquidity standpoint. This one, and I'm quoting Druckenmiller here, who wrote an op-ed piece in the Financial Times over the weekend on it. This was price management, and it wasn't liquidity management. They were trying to drive up prices to drive down yields. The big issues here, to Mark's point, on the longer-term structural forces that need to be addressed. Right now, our fiscal deficit is 6% of our GDP, highest it's been since wartime conditions back in World War II, and we just crossed the $40 trillion debt threshold just last week. And our fiscal deficit as a country is $2 trillion this year. Those are the areas that need to be addressed. And to be clear, neither administrations over the past several, it goes back, I guess since Clinton.
2001, we had a surplus.
Yeah, have really put any emphasis on addressing this problem.
But I got to say, under George W., the primary deficit, which is the total deficit less interest, was coming down his last couple of years. We had very fat people don't associate George W. Bush with great economic growth, but if we hadn't had the Great Recession on his watch, he would have been viewed as a terrific economic success. The primary deficit was coming down. Unfortunately, the Great Recession intervened. Under Obama, primary deficit was coming. He raised taxes, of course. Some would disagree with how you do it. But there is precedent for getting debt to GDP down.
But it has been, call it 10, 12 years.
Those are exceptions.
Yeah.
I think I started by saying there are a
few
couple
exceptions
of exceptions
over 25 years, right?
Yeah.
Since that anyone has really taken this seriously. And as a result of that, you can only do so much here on the fringes. Ultimately, the great thing about the way that the markets work on the longer end of the yield curve is that the market forces kind of dictate how ultimately yields are dictated because of the way that this Treasury market works. Taking a look around at markets, we have markets slightly down with the Dow Jones off 120 points and the S&P 500 off 10. We're going to have more on markets with Wall Street Watch, and get ready. It's the weekly edition of Ask Todd. Studio line 888-205-2263. Ask Todd right after this.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network. A single nursing home stay could cost you more than $14,000 a month. That's why so many families believe they'll have to spend almost everything before a loved one can qualify for Medicaid. But that isn't always the case. Cushing & Dolan has created a new guide called Last Minute Medicaid Eligibility. In it, you'll learn how Medicaid eligibility works, get information about last-minute planning options that may still be available, the mistakes that could cost your family, and why acting quickly could give you more options. Don't assume you have to lose everything to pay for long-term care. Get your free copy of our new guide called Last Minute Medicaid Eligibility right now by calling 866-848-5699. That's 866-848-5699, or you can request it online at legalexchangeshow.com. That's legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
It happens all over Massachusetts,
Can you tie my shoes?
in every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, Desi is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
I was 24 when I had a stroke.
I was 35 when I suffered a heart attack.
I was 46.
I was 62.
It's a fact. Cardiovascular disease is the leading cause of death in women.
But we can fight against our number one killer.
Talk to your doctor about your risk factors.
Know your family history.
Learn the warning signs and symptoms.
Together,
let's go red for women.
Visit goredforwomen.org to learn more.
Every mile can make a difference for a Massachusetts veteran. The DAV 5K Boston returns to Castle Island on Saturday, November 7th for a family-friendly day of community, remembrance, and support. Whether you run the 5K, join the 1 mile walk, or make a donation, your participation helps further the mission of the Disabled American Veterans Department of Massachusetts. Honor those who served. Sign up today at dav5k.boston. That's dav5k.boston.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Hi, it's Chuck and Mike from the Armstrong Advisory Group, and our guide this month is titled Navigating Retirement Housing Choices. Mike, as you get towards retirement, what are some of the considerations for whether you should stay in the property that you've been in for a while or consider moving to a new one?
To me, for most people, they come down to 2 factors. One would be financial, and 2 would be quality of life. And so, first things first, right? I mean, you're heading to retirement. Did you do enough saving to be able to afford to live in the same place you did, with or without that mortgage, with where property taxes and insurance costs have been going? So that's probably number one. But the one that people kind of start to forget about is the quality of life. And so how close am I to family? How close am I to health care? And am I going to be safe in this house 20 years from now from a healthcare perspective?
It seems like for most people, they're going to have different priorities as far as which of those come first. So it very much is not, here's what you do, but more, here are the things you need to consider and then get to your own conclusion.
Yeah, but I think it's important that people think long-term on this, right? You do not want to make this decision twice. And so very often we do see that happen. Hey, I'm moving here because of taxes, and I didn't think about the other qualitative lifestyle pieces about that move.
Folks, our guide is titled Navigating Retirement Housing Choices. There are 2 ways to request it. First, you can call 800-393-4001. Second, you can go to armstrongadvisory.com. That phone number again is 800-393-4001, or you can request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Time now for Wall Street Watch, tracking the stocks, the data, and the headlines driving markets so far today, right here on the Financial Exchange Radio Network.
Nvidia Day is upon us, and markets are modestly lower ahead of the chip and AI giant's earnings report due out after today's closing bell. Right now, the Dow is down about 0.25%, 116 points lower. S&P 500 down 0.1%, or 8 points off. NASDAQ down over 1/3%, or 96 points lower. Russell 2000 is edging higher, not much movement there. 10-year Treasury yield is up 2 basis points at 4.66%, and oil down nearly 1%, trading at $81 a barrel. Breaking news from Meta this morning: after it agreed to an $18 billion settlement with a group of state attorneys general over social media's harm to teenagers. With the settlement, Meta will implement a default 2-hour daily time limit on Facebook and Instagram for users under 18. Meanwhile, shares in financial software company Intuit down 3% after its fiscal year 2027 guidance disappointed investors. The company plans to attract new TurboTax customers, potentially with free offerings, despite a short-term hit to its do-it-yourself tax business. And J.M. Smucker is jumping over 3% higher after the owner of Jif Peanut Butter and Folgers Coffee reported higher than expected adjusted earnings and sales in the previous quarter. I'm Tucker Silva, and that is Wall Street Watch.
This is Ask Todd on the Financial Exchange Radio Network. If you have an existing estate plan or are in the market for one, Todd Lutzke is here to answer your questions and help you plan for later life. Ask Todd is presented by Cushing & Dolan, serving Massachusetts and New England for more than 35 years, helping families with estate and tax planning, Medicaid planning, and probate law. Visit CushingDolan.com. Now, here's Todd Lutzke.
It is Wednesday, so we are joined by Todd Lutzke from Cushing & Dolan. For any listeners out there that have questions on estate plans, revocable trust versus irrevocable trust, Medicaid eligibility, give our studio line a call at 888-205-2263. Again, that number, 888-205-2263 for any of your questions for Todd Lutzke. I have to start off by saying, Todd, you look fantastic today. For those who want to check out Todd's attire, he's in a very laid-back summer wear, summer fit on the Financial Exchange YouTube. You can take a look at it. He usually wipes the floor with me and is dressed to the nines and has me beat, but I'm glad he's come to my level here and he's looking nice and casual.
Casual today.
I appreciate that, Todd. Todd, a lot of times this comes up with clients who I'm dealing with who are far into retirement. They might be a little bit elderly, and unfortunately they run across the unfortunate situation where they haven't done the proper planning and they run into a husband or wife who is starting to deal with health issues. And how do you address that from a estate planning perspective? Is it ever too late to take measures to try and protect assets from the nursing home? How do you guys handle that?
Yeah, so it's almost it's a matter of both, really. You could be heading into a nursing home. That's usually when we're talking about last-minute planning, last-minute eligibility. So it's not something we plan for. But this idea of needing to do things last minute actually works for people who have done planning in advance, advanced planning in advance. Why? Because they have assets that are outside the trust. Can't put everything in. We never put everything in. And those have to be protected or dealt with. And then there's assets that people have that have not done any planning and are faced with going in the nursing home. So they have a lot more assets to deal with. What I'm trying to convey here is that when you are faced with nursing home planning, whether you've done planning or not, there's going to be things you need to do last minute other than just writing a check. So don't just, you go there and they say, oh, sorry, you're not, the nursing home will tell you have to write the check.
It's like $20,000 a month at this point in this area, right?
Exactly. It's up there. I had a client, they were worth probably like over $2 million between house and money and stuff. And there was no planning done. Husband and wife, they came in, not both of them. Husband was in the nursing home, wife was home, and they're like, what do we do? We were actually able to get that person eligible for Medicaid right away. You would think, how is that possible with $2 million? Well, the reason it's possible is because you guys, the general public doesn't understand what the rules are, but there's rules for married couples, single people, in terms of how assets are treated as countable or non-countable during the application process. So, for example, when you're running through a checklist of assets for a married couple, the first thing you might come across is the home because they all have one. Good news there, folks. When we try to tell you how a home is treated, a home is non-countable as long as the healthy spouse is living there. It's even non-lienable. Does have to be located in Massachusetts if you're applying in Massachusetts. And then that would be off the table. So that's a big number right there. If you had a $2 million client, that might be $1 million home.
Right.
You're halfway to getting eligible for Medicaid. And you just have to get rid of the rest of the million, which isn't always easy. But other things that you need to think about, right? And again, it's a little different, I say, for married couples versus single people. For a single person, a house, a home, is non-countable, but it's lienable. So you could get on Medicaid, but then you got to pay back the state if there is if you've been in the nursing home for a while. When you die, you got to pay back the state. You don't have that when it's a married couple. And the other thing with a single person is if the house is worth more than, call it, it's changing, but actually the BBBA bill that passed I believe, January 1, everywhere it'll be, if the house is worth more than $1 million, you'll just be denied. So it's not going to be the exact same for married couples and single people. And folks, that's really what it's all about. And you have to understand that for different items, they're treated differently, whether it's a rental property, a vacation home. So at the end of the day, there's just many rules governing these. And you really, the message, I think, the answer to your question is, don't just write the check. Call an elder law lawyer, see if you can get some help.
Absolutely. Great information there. If you have any estate planning questions for Todd Lutzke, he is here with us this week answering anything, whether it be in the realm of Medicaid eligibility, revocable trusts, irrevocable trusts, anything on the estate planning side of things. The studio line here to give us a call, 888-205-2263. Again, that number, 888-205-2263 for any of your questions for attorney Todd Lutzke. We're going to take a quick break here on the Financial Exchange. When we come back, we'll have more with Todd Lutzke and your questions right after this break.
Ask Todd with Todd Lutzke every Wednesday at 10:30, only here on the Financial Exchange Radio Network. A nursing home stay can cost more than $14,000 a month. Before you assume you have to spend everything to qualify for Medicaid, get the facts. Call 866-848-5699 for your free copy of Cushing & Dolan's new guide, Last Minute Medicaid Eligibility. That's 866-848-5699. Or request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Who wants to play golf to support the Disabled American Veterans Department of Massachusetts? I know you do.
Let's do it for the DAV.
Mark your calendars. Monday, August 31st, Granite Links, Quincy, Massachusetts. A full day of golf and entertainment, and all to raise money for the Disabled American Veterans Department of Massachusetts. Let's go. DAVMA.org/event.
Let's do it for
DAVMA.org/event.
The worst time to make a housing decision is when you don't have a choice. This is Chuck Zada from the Armstrong Advisory Group. Too often, people don't think about their next home until a health issue or the upkeep of a house makes the decision for them. If you start planning now, you can take your time, explore your options, and make decisions that fit your retirement goals instead of reacting to a crisis. In our new guide called Navigating Retirement Housing Choices, you'll learn about downsizing, 55-plus communities, continuing care retirement communities, assisted living, and the important questions to ask before making one of retirement's biggest decisions. Don't wait until circumstances dictate what you need to do. Get your free guide today by calling 800-393-4001. That's 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
In a heartbeat, you could be the difference.
Mark collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
You're listening to Ask Todd with Todd Lutzke on the Financial Exchange Radio Network.
We are back here with Todd Lutzke from Cushing & Dolan for our weekly segment of Ask Todd. If you have a question on the estate planning front, anything regarding nursing home protection or revocable trust, irrevocable trust, give our studio line a call, 888-205-2263. Again, that number for any of your questions for Todd Lutzke on the estate planning front, 888-205-2263. Todd, often have clients who you had mentioned in the prior segment just sort of which assets are countable from a Medicaid perspective and which aren't.
Right.
When you are applying for Medicaid, can you give the listeners a sense for really what is the benefit that they would gain there? I mentioned in the prior segment, nursing homes are very expensive on a monthly basis. What is the benefit of getting that Medicaid eligibility that would benefit clients and different families around this area?
So the way it works is it's all about leverage, right? What's the main benefit? The main benefit is leverage. Leverage how? Well, there's a Medicaid rate that you pay the nursing home, and then there's a private pay rate that you pay the nursing home. Obviously, the private pay rate is way higher, oftentimes double, let's say. It's probably close to double the amount. So if the nursing home costs $17,000 a month, you're probably, it's even more than that. You could probably get a Medicaid rate of maybe 7.
Okay.
That's not bad.
Yeah.
That's a big difference. So this is why it's so important. So even if it's last minute, right, and you're trying to, get on Medicaid, the goal is you might not save every penny, but you're going to stretch it. So if you're single and you can somehow take your excess resources, let's say the house is non-countable and you've gotten that off the table and you're single and you're applying for Medicaid, and you've got, $500,000 kicking around, and they're going to say you're denied until you get that $500,000 down to $2,000.
Mm-hmm.
Well, how do you do that? Well, you can't give it away. You create a 5-year waiting period.
Right.
So I know I'll buy a Medicaid annuity, let's say. So you could buy a Medicaid annuity that pays out over your lifetime, your life expectancy. So there's other rules that go with it, but life expectancy is a key term in terms of how long. So let's say you're 80 and you have a life expectancy of 10 years.
Mm-hmm.
You got $500,000 paying out over 10 years. I don't know. Let's just say for easy numbers, it's $7,000 a month minus your Social Security of $2,500 a month minus the Medicaid payment of $2,500 a month. Let's say, the annuity payment. So now you got $5,000 coming in. You're left with $2,000 that the state's paying.
Got it.
Wow, that's a great deal, right? Because now my money is being stretched over a longer period of time for the benefit of the person who's in the home, which is what we want. And then you also have a shot that the payback provision is only $2,000 a month. So it's only the lien against the annuity is only about $2,000 a month. That stretches your money way longer to not only take care of the individual who needs the money, but also there might be more money left over for the family at the end of the day. So that's really the leverage in which you get when you are trying to apply for Medicaid. But folks, how do we do this? Obviously, on the show today, I'm not going to be able to go through all of the assets, but I want you to understand that in this guide, there's a last-minute Medicaid eligibility guide is what can we do when we're faced with entering a facility last minute. And again, whether you've done planning or not done planning, there's always going to be excess resources. So I talk about things like primary residence? What about a rental property? How is that treated differently? What about a vacation home? What about IRAs versus 401ks? Those are treated differently. Life insurance, term insurance versus whole life insurance. These are all items that are treated differently, treated differently depending on whether you're married or single. And then how do we use annuities last minute to, take care of excess resources, excess money that might be available? Call and get this guide, folks. It'll help you not just write the big check to the nursing home, hopefully a much smaller one. 866-848-5699 or legalexchangeshow.com. Again, 866-848-5699 or legalexchangeshow.com to download the guide there. And you can always go to Cushing Dolan PC for more information on our Instagram page.
We are here with Todd Lutzke. If you have any questions on the estate planning realm, give our studio line a call, 888-205-2263. Again, that number, 888-205-2263. Todd, what are some of the positive impacts that come from those people who have done the trust planning early, who perhaps did set up the irrevocable trust and have surpassed that 5-year waiting period? What are some of the pros that can come from doing that, and how does that get applied to different assets in terms of they've done the irrevocable trust? Mm-hmm. What happens with their properties? You mentioned rentals and vacation properties, which I'm sure a lot of listeners have. What are some of the benefits that come from doing that type of work?
So it really comes down to the fact that if we're still talking about heading into a nursing home at some point, the benefits are there's clearly going to be less assets outside the trust to protect, to deal with last minute. So let me give you an example. So if you've done your planning, likely what's in the trust is going to be all your real estate. Certainly if you've done it with us, it's going to be all your real estate. Your real estate will be in there. Whether it's a vacation home or rental property, it won't matter. In addition, we'll put some money in. But what's definitely not going to be in there is your IRA. So we always want to talk a little bit about IRAs and how to deal with them, right? So you have IRAs that are outside the trust, and you have some money that you're going to leave outside the trust. The biggest issue is the IRA, right? We can't plan in advance for an IRA because I can't move the money into an irrevocable trust without paying a huge income tax. So we know we're going to always have that money outside the trust. Now, here's the real issue. Who gets sick and whose IRA are we dealing with? Let's say you've got both a husband IRA and a wife IRA. Okay, so let's say husband gets sick, and let's say husband's IRA is $500,000. And let's say wife's IRA is $600,000. Wow, what are we going to do? Well, that's a lot of excess assets. Well, the wife's IRA, you could take and buy a Medicaid annuity right inside the IRA. Those are those annuities that we were talking about earlier in your example, where she could kind of, buy that annuity inside the IRA to preserve the income tax problem. What I mean by that is this annuity then can pay out, a monthly amount based on this annuity. Yes, it has to come out of the IRA to her, and then she'll have income tax on that hit. Now, it's possible that you could arrange that IRA for her anyway to come out once a year. And that way, if it comes out in a big chunk, it can then be rolled back into the IRA within 60 days and you avoid the income tax hit. But you're only allowed to do it once a year, so you got to make sure the annuity pays out once a year. So it's some structuring, some planning ideas where you can actually make that work. So that's a way of that. But the problem IRA, well, that's the sick spouse.
Right.
So the problem IRA, you come, to the sick spouse and you say, all right, there's $500,000 there, and I've taken care of the money in the healthy spouse's IRA. But remember, the healthy spouse is not allowed to have more than, it goes up every year, but let me just throw out a number like $155,000.
Sure.
Somewhere in that range. You can't have more than about $155,000, and the sick spouse is not allowed to have more than $2,000 to become eligible. So what am I going to do with the $500 that's in his IRA? Well, I want to take it out. I want to give it to the healthy spouse. By the way, transfers to spouses are permissible. And then the healthy spouse could buy an annuity for her. And again, like magic, you convert the asset to an income stream when you buy the annuity, making it no longer countable. Well, great idea, but huge income tax problem.
Right.
Right. You take $500,000 out of there, you're going to lose, 30, 40%. That's $200,000. You lose $200,000. You have to think about the health status of the individual before you do it. If you're fairly confident they're going to live a while, then it's worth doing it because you're saving $17,000 a month. That'll add up in no time. But if they're going to die right away, well, then maybe private pay. So, folks, strategy is always important when you're entering a nursing home. Don't go at it alone. Call and get some help.
Todd, thanks so much for your time this week. You were incredibly helpful, and I hope you have a fantastic weekend. Thanks
Thank you.
so much.
Always a pleasure.
This has been Ask Todd on the Financial Exchange Radio Network. Ask Todd with Todd Lutzke has been presented by Cushing & Dolan, serving Massachusetts and New England for more than 30 years, helping families with estate and tax planning, Medicaid planning, and probate law. Call 800-393-4001 or visit CushingDolan.com. The views expressed in this segment are solely those of Cushing & Dolan. Armstrong Advisory does not provide any legal or tax advice. Please consult with your legal or tax advisor on such matters. Cushing & Armstrong do not endorse each other and are not affiliated.
Markets are in relatively mixed territory, all in the negative, but only slightly so. The Dow Jones is off about 125 points, or 0.25%. The S&P 500 only off a measly 3 points, and the NASDAQ is off about 0.2%. Taking a look at the U.S. 10-year Treasury, which has been in the headlines after Treasury Scott Bessent's actions last week, it is only up 1 basis point at 4.65%. That's all the time that we have for the first hour of the program, but we have a jam-packed second hour with a lot to cover, so stick with us here on the Financial Exchange. We'll be right back at it.
Retirement isn't just one stage of life. It changes over time, and your home should change with it. This is Mike Armstrong from the Armstrong Advisory Group. You may have heard of the go-go years when you're traveling and enjoying the freedom you've worked so hard to earn. Then come the slow-go years when convenience starts to matter more, and eventually the no-go years when safety and support take center stage. Our new guide, Navigating Retirement Housing Choices, shows you how different housing options can fit each stage of retirement. From staying in your home to downsizing to exploring elder life communities, you'll learn what questions to ask before you're forced to make a decision. Get your free copy today by calling 800-393-4001. That's 800-393-4001, or request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. A single nursing home stay could cost you more than $14,000 a month. That's why so many families believe they'll have to spend almost everything before a loved one can qualify for Medicaid. But that isn't always the case. Cushing & Dolan has created a new guide called Last Minute Medicaid Eligibility. In it, you'll learn how Medicaid eligibility works, get information about last-minute planning options that may still be available, the mistakes that could cost your family, and why acting quickly could give you more options. Don't assume you have to lose everything to pay for long-term care. Get your free copy of our new guide called Last Minute Medicaid Eligibility right now by calling 866-848-5699. That's 866-848-5699. Or you can request it online at LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up because we have something better,
stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit GoRedForWomen.org today to learn more.
When a heart stops, the clock starts. You are the first responder until help arrives. In that moment, 4 minutes equals brain damage. 6 minutes equals too late in an emergency. The first responder is you. We need you. Will you be ready? Learn CPR. Visit heart.org/nation. That's heart.org/nation.
This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM. Concord, Boston, the Money Matters Radio Network.
In a heartbeat, you could be the difference.
Mark collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Every mile can make a difference for a Massachusetts veteran. The DAV 5K Boston returns to Castle Island on Saturday, November 7th for a family-friendly day of community, remembrance, and support. Whether you run the 5K, join the 1-mile walk, or make a donation, your participation helps further the mission of the Disabled American Veterans Department of Massachusetts. Honor those who served. Sign up today at dav5k.boston. That's dav5k.boston.
Is it a stroke? Even if you're not sure, act fast and call 911. Signs can include face drooping on one side, arm weakness, speech difficulty, or not making sense when talking. Time is critical. A stroke requires immediate medical care, which starts as soon as the ambulance arrives. So if you see any sign of stroke, act fast and call 911. Visit mass.gov/stroke, sponsored by the Massachusetts Department of Public Health.
Our Senators Edward Markey and Elizabeth Warren and Representative Jake Auchincloss are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about techniques that can help protect your assets from long-term care expenses last minute. Todd, is the healthy spouse allowed to keep anything when the sick spouse enters a nursing home? And what happens if the sick spouse has the majority of the income?
Great question, because when you're talking about applying for Medicaid last minute, or when someone enters a nursing home and you want to do this last minute, they're going to look at both assets and income, right? So from an asset standpoint, as a married couple, they do allow you to keep approximately $148,000. That piece is indexed for inflation or changes every year. The sick spouse is allowed to keep $2,000. So you're around $150,000 of total assets that you can keep. By the way, if you're single, you only get to keep $2,000 in assets. From an income perspective, the good news is that the healthy spouse can keep all of the healthy spouse's income, Social Security, pension, you name it. And so it does not matter how much income the healthy spouse has, but they are entitled to at least a minimum monthly maintenance needs allowance, but no maximum.
Todd Lutzke and the estate planning experts at Cushing & Dolan have written a brand new guide that details last-minute Medicaid eligibility. You can request this brand new guide by calling 866-848-5699. That number again is 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Paul Lane and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Paul Lane and Marc Fandetti.
Markets are relatively flat an hour and a half into trading as we all eye Nvidia's earnings that are to be reported after the market closes today. Paul Lane, Marc Fandetti, and Tucker Silva here with you. As I mentioned, the S&P 500 only up 3 or 4 points, and the Dow Jones is off 83 points today, so really not a lot of market action, but we will see if what we get from Nvidia at the close of the bell today will have any impact on tomorrow's trading. It's largely anticipated that Nvidia will come out with blowout numbers. They are anticipating that revenue doubles from where it was last year, as well as net income. But the focus will be if there is any forward-looking commentary, any sort of insights that can be parsed through as to what the hyperscalers are thinking from a capital expenditure perspective, because Nvidia does sit at the epicenter of all of the AI demand out there. So that will certainly be in focus. And of course, the other big focus for the rest of this week is Kevin Warsh. He will have an opportunity to speak at the Jackson Hole Symposium on Friday at 10 a.m. So those become sort of the biggest stories for this week. We'll have a full breakdown of NVIDIA's earnings on tomorrow's show, but we'll kick off the second hour of our program here talking a little bit more about what we anticipate from Kevin Warsh on Friday in Jackson Hole. And he sits at a point in time where it seems as if you read the Wall Street Journal and several other news publications, where they are eager to hear more from him. His previous appearance in the July Federal Reserve meeting was largely panned because he offered little in the way of specifics. This is something that is a intention of this new Federal Reserve chair. Kevin Warsh doesn't want to really provide a lot in the way of forward guidance. However, the thing that he has spoke very openly about is the need for the Federal Reserve to get inflation back to 2%. It now sits at 3.7%. There have been mixed indicators this year as to whether or not the Federal Reserve should take steps to be more restrictive. The labor market was initially a concern of the Federal Reserve, and that led to some rate cuts, very small rate cuts. But those concerns had largely been sort of taken off the table for the time being on the labor market side. However, the inflation risks still loom quite large, and you can make arguments in one direction or another. One camp may say these are temporary shocks that we are dealing with from an inflation perspective. Others may say that the economy is running hot and demand is outstripping supply. So that really is what is in focus for this meeting on Friday, and it will be interesting to see, Mark, what sort of stance that he takes. Does he comment on anything that Treasury Secretary Scott Bessent has done with the Treasury markets? No, I'm sure he's not
going to take a different stance than he's taken. Why should he? The market needs to. Markets and whiners in the financial press need to get used to, as he put it, a withdrawal of the spoon feeding. This goes back to what we were talking about in the last hour. Fiscal, in the case of Bessent, or monetary in the case of Warsh. And it's called monetary. We throw these terms around. It's called monetary because the Fed controls the supply of money. Really, that's how they influence interest rates. They really control short-term interest rates and how they try to influence demand. You mentioned demand outpacing demand in the aggregate. Overall, demand outpacing supply. That pushes prices up. That's the type of inflation the Fed can do something about. The question is the elevated inflation of the last, say, year due to demand pull or cost push, to put it in terms that you might have heard in your first economics class if you ever took one? The Fed can do something about the former by moderating demand when it raises interest rates. Can't do much about, say, rising oil prices, but it can respond to expectations, which may go up in response to rising oil prices. As you can tell, it gets sort of complicated, but I wouldn't expect the chair, based on what I know about his economic philosophy, if you will, to give any ground at all. He's not going to suddenly start telling markets where he expects Fed funds to be 2, 3, 4 quarters from now, or what even might drive that decision at the time. And that disappoints financial journalists who are used to writing about that. There's going to be less to write about, first of all.
Mm-hmm.
There just is.
Yep.
Because he's going to be less forthcoming. And if you're not giving so-called forward guidance, which, by the way, has limited use cases in theory. I have no idea how it got to be used as a regular tool. But anyway, there's less for them to write about. So there's a lot of hue and cry from that corner. And, of course, bond traders actually have to engage in price discovery now, so they're whining.
You don't think that there is any need for a Fed chair to kind of at least lay out the methodology, if not sort of providing
what would you say?
feeding?
Let me answer that question by sort of posing a question. If you followed what are sometimes called Taylor rule type specifications for setting the real federal funds rate, or we'll just call it the stated federal funds rate. We don't have to make that distinction. Would you tell people that I'll just talk in researcher terms for a second here. I put a coefficient on the output gap of 0.5 and a coefficient on the inflation gap of 1.5. That's a fancy way of saying if inflation outpaces my target, I'm going to go more than 1 for 1 on Fed funds. I'm going to raise it more than 1 for 1 with the increase in inflation. And if if the output gap is 1, I'm going to lower Fed funds by 0.5. That's a reaction function. Sometimes you hear that term thrown around. That could not have anticipated the right response to the Great Recession. It could not have anticipated the right response to COVID. Of what use is articulating a so-called reaction function? In plain English, it's just a rule. It's like asking you as a parent, if your kid came home today, got a bad grade, and then mouthed off to you, what would you do? And I asked you to you got to write it down so it's formulaic. So when I'm babysitting your kids, which no sane person would ever have me do, I'm just going to follow your formula for parenting, Paul, and I should get the same results as you do. You'd say, I'm sorry, it's not that simple. Or
yeah, that's a good analogy.
Like, you can't make formulaic something as complicated as parenting because there are way too many variables involved. The same is true of monetary policy. I wish Warsh would put it sort of that way and explain, no, I'm not just being lazy. I'm not just busting your chops. This is philosophical with me. And I suspect he's going to get there.
Perhaps could he mention some of the variables, like in this analogy that we're going to run with on the parenting front, on the bad grade, I would say, okay, some of the variables that I would consider in terms of what dictates the punishment is how much effort did, little Johnny put into preparing for this exam? Was he loafing around the house at home, or was he actually looking at the books and giving a good effort? Same analogy here. Can you mention some of the factors in his? I'm saying not you, but Kevin Warsh. Can he mention some of the factors? Gee, we're looking at these particular factors.
They're in these so-called Taylor rules that people have.
Basically, we're looking at
a fetish
we're looking
for
at
and
everything.
Misunderstand.
Yeah, but they won't.
He's not going to tell you what his. Again, you hear in the Bloomberg, the financial press. What's his reaction function? Stop. He's not going to give up. He's not going to give that up because he may not have one because he realizes it's context specific. Many of these so-called rules, they're useful for academic purposes, but not in real
practice.
life.
Yeah.
Even the inventors of these, not the inventors, Taylor didn't invent it as a prescription for monetary policy. He invented it to describe, didn't invent it, he estimated it. He estimated it to describe how the Greenspan Fed was behaving. This is how the Greenspan Fed reacted to a gap between demand and supply, what you talked about earlier. This is how the Greenspan Fed or the Volcker Fed prior to that reacted to inflation exceeding a target, even though they didn't articulate a target at the time. If you assume a policymaker behaves in that fashion, which is a big if, but if you assume that, because you have to assume something, then you can estimate their reaction, their rule. Does Warsh have a rule in his mind? I suspect he probably does. He knows the conditions under which he'd raise Fed funds, and we're going to have to infer that rule from his actions over time. He's not going to lay it out for you.
Unfortunately, that seems to be the case for all financial journalists out there, and for people who host radio shows, that there is not much to glean. But we'll see. Maybe Friday will be different. But I anticipate that you're probably on the right train of thought there, Mark, that it'll be more of the same, a pretty tight-lipped Fed Chair Kevin Warsh. Taking a look at the September meeting that we have coming up for the Federal Reserve, that will be on September 16th. Right now, looking at the CME futures market, it seems as if we have about a 62% probability that the Federal Reserve would hold rates where they are, and about a 38% probability that they may go with a quarter basis point hike. We'll see how those ebb and flow over the next few weeks here. We're going to take a quick break here on the financial exchange, but when we come back, we're going to be talking about the K-shaped economy. This is a very popular term throughout 2025. Is it still a thing, or do we have to change to another letter to describe the way the economy is trending? We're going to cover that and much more right after this break here on the Financial Exchange.
Missed a show? You can find them on our YouTube page. The show streams live every day, but every hour is archived, including all of our most newsworthy interviews. Go to YouTube and search for the Financial Exchange Radio Show.
Stuck in traffic again? Same road, same commute, same thought. How many more years am I doing this? 1, 2, 5? At the Armstrong Advisory Group, our financial advisors help people answer one of the biggest retirement questions. Could I be retired right now? Many factors may affect your decision, including what your income might look like and whether your retirement plan is built for the life you actually want. We can provide you with some strategies to help you see where you stand. So before you assume you have to keep working, get a clearer picture. Visit our website at armstrongadvisory.com and schedule a no-obligation meeting. The Armstrong Advisory Group. We answer only to you.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. One day, you're living in your own home. The next, you can't return home after rehab. Now, you're faced with a nursing home bill of more than $14,000 a month and wondering how you're going to pay for it. These situations can occur without warning, but Cushing & Dolan can help. Before you make any major decisions, get the facts. Cushing & Dolan's new guide, Last Minute Medicaid Eligibility, explains common misconceptions about Medicaid, what assets may or may not be at risk, and why the first answer you receive isn't always your only option. Call right now. 866-848-5699, and get you a free copy of Last Minute Medicaid Eligibility. That's 866-848-5699, or you can request the guide online at legalexchangeshow.com. That's legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Our Senators Edward Markey and Elizabeth Warren and Representative James McGovern are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
In a heartbeat, you could be the difference.
Marc collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
The Financial Exchange is now available every day from 11 to noon on SiriusXM's Business Radio Channel 132. Stay informed about the latest from Wall Street, fiscal policy, and breaking business news every day. The Financial Exchange is live on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
Is the K-shaped economy ending? Finance pros weigh in. This is a piece here from CNBC. So just to give a backdrop to listeners, one of the most commonly discussed subjects and trying to frame the economy, I think this mostly came about in 2025, was this K-shaped economy, meaning that there is this huge disparity between the ultra wealthy, the high income earners versus those on the lower income earner side. So think of, the K with one end sort of going up and the other end going down. There was this sort of statistic that was thrown around. It stems from some analysis done by Moody's in which the top 10% of income earners were responsible for 50% of the spending throughout the country. Now, I had done a lot of digging on the subject because we did talk about it so frequently last year. I was curious to try and just get multiple different perspectives on this so-called phenomenon. And from all that I could glean from multiple different sources, it was hard to specifically pinpoint that this actually was the case. It just sort of seemed like you looked at different analysis and there was different conclusions that you could take away. But this has been the common refrain that's come up quite frequently, this K-shaped economy. Now there is a different slant to this, and Mark, we're running into so many different letters here. I don't even know how much I want to put stock into some of these proposed letter changes. Now they're suggesting that perhaps the economy is more like a C. This actually comes from Treasury Secretary Scott Bessent, in which the lower income earners are starting to make up some ground. The common refrain was that these lower income earners had been punished significantly by the 30% inflation that we've seen over the course of the last 7 years or so, and their income hadn't kept pace. And there is numbers, to be clear, that back that up, where the wage increases haven't been commensurate with some of the inflation, whereas those higher income earners have had wage increases that have kept pace with inflation. And typically those higher income earners in that top 10%, they're often invested in equity markets, and we know that the last 7 years have been quite strong from an equity perspective, so those portfolios of those higher income earners have fared quite well. Recent numbers have indicated that the lower income thresholds have seen their household income increase 5.2% at an average pace for the month of July. That's year over year. That was surpassing the highest increases that we've seen in that sort of threshold of income earners since December of 2024. But with any of these, I'm just not really sure I'm willing to lean into one or another in terms of the shapes of the economy. It just seems hard to sort of pin down at any given point in time.
I guess it's a catchy shorthand for the trends you described. Higher income people, we'll just say doing better. I mean, you provided lots of data there, but that's sort of the upshot. That's been the case for like 40 years, though.
Right.
With a couple of exceptions. So if you believe in the that trends are usually driven by larger forces, you probably believe that there's something behind those that is not going to change on a dime. I know I'm being very generic here, sorry, but you gave so much great detail that I can't improve on what you said. I'll just say, yeah, these are long-term trends. They're influencing our politics. Look at the hostility toward trade, for example. Both parties.
Yep.
Trump's just an extreme sort of version of whimsical, depending on what side of the bed he got up on, tariffs. Like, you don't know which way is up with this guy. But if you're a manufacturer, I'm not speaking for myself. I'm telling you what what business people are saying in the press. They're utterly confused and paralyzed by our tariff policy. He's just an extreme example of it. Protectionism would have become ascendant relative to the liberalization we saw in the 80s and 90s either way. And that's in part a reaction to the trends that you mentioned. Declining real wage growth, and growth in asset prices, including homes, favoring mainly people who already had money.
Absolutely. We've seen homes, the average monthly home payment on mortgages has gone up 57% in that same span of time. Speaking of tariffs, the Canadian tariffs have been in the news over the last few days or so. Canada announced on Tuesday tariffs on roughly $20 billion of U.S. goods days after the U.S. kind of escalated our trade tensions on them for $20 billion of Canadian goods. This is just further bitterness between the two countries. I could get into the nitty-gritty of what the tariffs are being imposed on, but we've seen this song and dance before. Mark and I and others on the show have covered this long enough to know that ultimately these are fickle and they move quite quickly. So while the auto imports tariff sits at 25% today, President Trump has threatened to double that tariff to 50%. So for my sanity's sake, I'm just not going to dive into the details. The bottom line is we have enacted some new tariffs against Canada. They have come back with some tariffs that have been levied against us.
Bigger picture, the trade deficit didn't improve last year. If that's your objective, it did. All the wild tariff gyrations did nothing. If your objective was to decrease the trade deficit, you failed. If that was the administration's objective last year, I don't know. Their stated objectives are all over the place on this too. He's mad at this. He's mad at Doug Ford, so we're going to put tariffs on Ontario. He's mad at Brazil because they're putting his buddy in jail. We're going to put tariffs on them. I don't know what the objectives are anymore, and I defy anybody to state them coherently because they're not coherent. But the bottom line is tariffs don't change the balance of payments, which is a little bit more broad than the deficit in goods, because the deficit in goods is a savings problem at both the federal level and among people, us. It is not an unfair trade problem. We have surpluses with some countries. We have goods deficits with other countries. There are countries that have very high tariffs and a very big goods deficit. There are countries that have very low tariffs and so there's no correlation between tariffs and balance of trade. It is entirely the wrong way to go about fixing this problem. Once again, with the current administration, much like with the fiscal issue we were talking about in the last hour, you want to get long-term interest rates down, shrink the deficit. Same solution, conveniently, for the trade deficit. You want to get the trade deficit down, increase national savings. They're not pulling the levers they have control over in favor of theatrics and bluster, and it's not helping anybody.
The tariff situation is ongoing, and we'll keep you apprised of that. But like I said, again, some battling back and forth between Canada and the U.S. Taking a look around at markets, a very flat day. The Dow Jones is off about 115 points, and the S&P 500 basically flat. We're going to have much more on the markets with Wall Street Watch right after this break. Stick with us.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
The biggest retirement decision you make may have nothing to do with your investments. This is Mike Armstrong from the Armstrong Advisory Group. You've worked hard preparing your finances for retirement, so take the time to think about whether your home will still fit the life you want to live. The house that's perfect today could become more work than it's worth a few years from now. Stairs, maintenance, a big yard, or even being too far from the people and places that matter. Our new guide, Navigating Retirement Housing Choices, walks through the different stages stages of retirement, the housing options available, and the questions you should be asking now before a decision becomes urgent. Get your free copy today by calling 800-393-4001. That's 800-393-4001, or you can request the guide by visiting armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. One day, you're living in your own home. The next, you can't return home after rehab. Now, you're faced with a nursing home bill of more than $14,000 a month and wondering how you're going to pay for it. These situations can occur without warning, but Cushing & Dolan can help. Before you make any major decisions, get the facts. Cushing & Dolan's new guide, Last Minute Medicaid Eligibility, explains common misconceptions about Medicaid, what assets may or may not be at risk, and why the first answer you receive isn't always your only option. Call right now, 866-848-5699, and get your free copy of Last Minute Medicaid Eligibility. That's 866-848-5699, or you can request the guide online at LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive. Most of the time, it's because no one nearby performs CPR. Every walker who joins HeartWalk means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Find your local HeartWalk at heartwalk.org.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Hi, this is Chuck and Mike from the Armstrong Advisory Group. We have a guide available this month titled Navigating Retirement Housing Choices. Mike, when we look at the considerations for people in their housing and retirement, one that comes up are these continuing care retirement communities, CCRCs, or age-in-place communities as they're known. How does someone make a decision about looking at one of those?
Well, I think obviously you have to sort out your priorities, but the first thing is to think long-term about this. And what people sometimes overlook with these places is that term continuing care means that they adapt to your needs over time, but they do not just allow anyone in. In a lot of cases, they will have cognitive and physical tests that you need to pass in order to be accepted into these communities that then will provide all sorts of care later in life. And so I think early on is always better if you're considering that sort of thing.
The financial aspect of these also has a number of considerations as well in terms of what's actually affordable given your particular budget and liquidity.
Do I need a buy-in? Am I going to rent a place? What are my options for later in life? And then all sorts of tax considerations. Hey, I really want an income tax-free state. Well, is that worth it if I'm going to be paying more in property taxes given the composition of my assets and income? All of these really important considerations.
The guide this month is titled Navigating Retirement Housing Choices, and you've got a couple different ways to request it. First, you can call 800-393-4001. The second choice, you can go to armstrongadvisory.com and request it there. Again, that website is armstrongadvisory.com, or you can get it by calling 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Time now for Wall Street Watch, tracking the stocks, the data, and the headlines driving markets so far today, right here on the Financial Exchange Radio Network.
Well, it's officially Nvidia earnings day, and markets are mostly quiet, dipping into negative territory ahead of The chip and AI giants earnings report due out after today's closing bell. Right now, the Dow is down about 0.25% or 144 points lower. S&P 500 down only 5 points, mostly unchanged. NASDAQ down over 0.25% or 72 points lower. Russell 2000 also off about 0.25%. 10-year Treasury yield is up 1 basis point at 4.65%, and oil dipping, trading at $82 a barrel. Breaking news from Meta after it agreed to an $18 billion settlement with a group of state attorneys general over social media's harm to teenagers. With the settlement, Meta will implement a default 2-hour daily time limit on Facebook and Instagram for users under the age of 18. Meta is up by 2%. Meanwhile, shares in Intuit dropping 4% after its fiscal 2027 guidance disappointed. The company plans to attract new TurboTax customers, potentially with free offerings, despite a short-term hit to its do-it-yourself tax business. J.M. Smucker is up by 2% after the owner of Jif Peanut Butter and Folgers Coffee reported higher than expected adjusted earnings and sales, and Zoom Communications is now down by 7% after its current quarter guidance fell short of street forecasts. I'm Tucker Silva, and that is Wall Street Watch.
Soaring diesel prices are helping oil companies but hurting consumers. We now sit with the cost of diesel, according to AAA Motor Club on Wednesday, at $5.62 a gallon. That's 53% higher than it was a year ago. This has been from, largely covered all the energy increases in price that we've seen. Numerous factors contribute to this. Of course, the war between the U.S. and Iran has seen the volume of crude that's being refined in the Middle East shrink from 8 million barrels per day in 2025 to 1.6 million barrels per day in 2026, according to S&P Global Analyst reports. Then you also have, as another issue that is being dealt with in the energy markets, the war between Russia and Ukraine. Ukraine has had many drone attacks on Russian refineries. That has impacted their refining capacity in Russia, in which now they are only doing about 3.9 million barrels per day, down from 5.3 million barrels. And this has had a significant impact, Mark, year to date on some of the inflationary pressure that we've seen. Of course, when the Federal Reserve looks at this, they strip out the impacts of energy, which tend to be sort of one-time shocks in one direction or another. But this certainly has a significant impact on businesses and leading to higher prices for consumers.
Yeah, this is one of the way in which the oil price shock will propagate gradually throughout the economy. And the Fed can't help but be sorry. I'm having position. I'm having mic position issues today. Am I a little off balance? What is it?
I keep telling you. He's like in the batter's box, but like,
what if I turn
he's got a foot out, and normally
he didn't draw attention.
Sorry for the inside radio here, everybody. What if I turn it this way and I look at Paul this way?
That's how you
See the microphone. Talk into it.
Is that what this is?
Continue, Diesel. Go.
So the Fed has to think about, even though. What am I not? Am I still off?
Go. Talk.
No, I don't. Now I don't want to. The Fed's got. Look, the Fed can't. It's often said the Fed can't pump more oil, et cetera, et cetera.
Mm-hmm.
That is an unhelpful, trite, frankly, just dumb thing to say. The point is not that the Fed can prevent supply shocks, like an increase in the price of oil, and that's a bad one. There are good ones too, like when AI increases productivity, if not when. If most people think it's a win, but the Fed can do something about how we respond to those supply shocks. And if inflation expectations go up, which they have, the Fed has to consider that people may demand higher wages. Companies may, in anticipation of increased costs, pass through price increases so they can afford the higher priced inventory and inputs. And this is how inflation becomes entrenched, which is why the Fed can't afford to wait too long in response to supply shocks. We saw the detrimental effect of waiting too long in 2021, 2022, when a good part, not all, and researchers disagree on exactly how much, but at least part, probably most of the inflation in that period was supply shock driven due to COVID restrictions and supply chain malfunctioning and stuff like that.
Mark, I really loved your stance there. You're back in the game, man. You're looking good. On the,
facing you, actually talking into the microphone.
Mark's having a rough day here, so retirement might be something that he's kicking around as poor Tucker berates him over the course of the show. But retirement isn't just one stage of life. It changes over time, and your home should change with it. This is Paul Lane from the Armstrong Advisor Group. You may have heard of the go-go years when you're traveling and enjoying the freedom you've worked so hard to earn. Then come the slow-go years, when convenience starts to matter more, and eventually the no-go years, when safety and support take center stage. The question is, will your home be ready for each of those changes? Our new guide, Navigating Retirement Housing Choices, shows you how different housing options can fit each stage of retirement, from staying in your home to downsizing to exploring elder life communities. You'll learn what questions to ask before you are forced to make a decision. Get your free copy today by calling us at 800-393-4001. Again, that's 800-393-4001, or request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Really exciting development here from a company by the name of Revolution Medicines. They had presented some of their results on a pancreatic cancer drug last spring, and the results were met with a 1-minute standing ovation, just in terms of a tremendous breakthrough that they made. Now the FDA has approved the drug for pancreatic cancer that Revolution Medicines is behind. This is a huge milestone in pancreatic cancer treatments. This drug was able to allow for those people with pancreatic cancer to live more than 13 months, nearly twice as long as what chemotherapy would provide alone. It does have side effects associated with it, but this particular cancer, pancreatic cancer, falls in a class of cancers that researchers have been trying to target for decades. Since the early 1980s, there has been the small number of mutated genes that have driven a lot of human cancers. This is the first of its kind where a drug has been able to go after the protein mutations that have been really the cause of a lot of cancers and probably a lot of loss of lives for many of our loved ones out there. So certainly a great development that we want to highlight by Revolution Medicines here, getting that approval. So hopefully this will stimulate a lot more drug discovery in this area and will enable for cures in other spots. It seems like it's been a real good couple of weeks here for the development of cancer drugs, and we hope that momentum continues. Taking a look around at markets, again, it's been a very quiet day here in early trading, with the S&P off only about a point or two here and the Dow Jones off about 150 points. We will have Nvidia reporting earnings at the close of the bell today, so we'll see what impact that may have on markets tomorrow, but markets relatively quiet at the moment. We're going to take a quick break here on the Financial Exchange. When we come back, a little bit of Stack Roulette right after this.
Get real-time financial insight as news breaks. The Financial Exchange is live on X. Watch the show and follow us for the most up-to-date business news you need to know. This is the Financial Exchange. One day, you're living in your own home. The next, you can't return home after rehab. Now, you're faced with a nursing home bill of more than $14,000 a month and wondering how you're going to pay for it. These situations can occur without warning, but Cushing & Dolan can help. Before you make any major decisions, get the facts. Cushing & Dolan's new guide, Last Minute Medicaid Eligibility, explains common misconceptions about Medicaid, what assets may or may not be at risk, and why the first answer you receive isn't always your only option. Call right now, 866-848-5699, and get your free copy of Last Minute Medicaid Eligibility. That's 866-848-5699, or you can request the guide online at legalexchangeshow.com. That's legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
The worst time to make a housing decision is when you don't have a choice. This is Chuck Zada from the Armstrong Advisory Group. Too often, people don't think about their next home until a health issue or the upkeep of a house makes the decision for them. If you start planning now, you can take your time, explore your options, and make decisions that fit your retirement goals instead of reacting to a crisis. In our new guide called Navigating Retirement Housing Choices, you'll learn about downsizing, 55-plus communities, continuing care retirement communities, assisted living, and the important questions to ask before making one of retirement's biggest decisions. Don't wait until circumstances dictate what you need to do. Get your free guide today by calling 800-393-4001. That's 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up because we have something better,
stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit goredforwomen.org today to learn more.
Our Senators Edward Markey and Elizabeth Warren and Representative Stephen Lynch are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Stay informed and prepared for market changes and breaking business news. The Financial Exchange is live every day on YouTube. Tune in, subscribe, and keep up to date on all of our show's content on a daily basis. This is the Financial Exchange Radio Network.
The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts, and this year's 5K is officially sold out. The race will take place on Saturday, November 7th at Fort Independence on Castle Island, and we hope you can take this opportunity to consider making a donation. Your gifts help provide vital services like free transportation to medical appointments and safe housing for single veterans and their families. Donate today at dav5k.boston. That's dav5k.boston.
All right, time for a little bit of stack roulette. I will let Mr. Fandetti bat lead off. What do you got for me, Mark?
Did you see the story about Bill Gates? This is in the Financial Times. I don't know if it was reported elsewhere, calling for human reserved jobs to be protected from AI.
I did see that. He also proposed a tax on AI tokens to help fund a social safety net, which doesn't really seem like the Bill Gates that I knew over his time.
What
at
are
Microsoft.
human reserve jobs, and would anybody actually want them? I mean, the examples he gives in health, I'll just quote, in health, for example, Gates says, imagine a robot giving you the awful news that you have an incurable disease. Well, you haven't met my GP, first of all. I'm not sure that would be a downgrade. No, just kidding.
There are some doctors out there that have very poor bedside manner.
Sort of stoic, yes, which I respect, but might not
I can tell you,
well with
my
a lot
wife
of people.
during pregnancies did not take to those approaches too well. That was not the way to approach
the sort
it.
of
The stoic,
clear-eyed, factual.
Yeah, the clear-eyed factual, or bringing up the off chances of certain rare conditions developing.
Of course,
and
they
have to do
disclose
that, but there's a
because
way
they
to
get-
there's the way to deliver that. More easily than others.
Yeah, don't bury the lead there. The lead there is that the probability is like infinitesimal.
Exactly.
Not this is what
there was
could
some
happen.
there was some failures there. But anyway, doctors, they all have a different style.
So, Gates kind of sounding the alarm about AI's potential to displace workers. And that's true of any general purpose technology or any technology for that matter. I guess the argument here is that AI will do it more quickly because it's advancing so rapidly. I'm putting a question mark at the end of that because is that fair? Is that this is different than I don't know, the cotton gin or electricity, or cotton gin is not general purpose, but you know what I mean. This is going to advance so fast because it can improve itself that it has the potential to displace large swaths of the workforce all at once. Is that it?
Yeah, I mean, this is not a new suggestion by a billionaire.
Oh, really? Somebody suggested actually cordoning off certain parts of the labor force?
No.
Sorry.
Sorry, that is new.
That's what struck me as weird.
Yeah,
Okay.
that is new.
Sorry,
You're
sorry,
right. The phenomenon of suggesting that there's going to be job loss is more specifically what I was saying, but I get what you're saying, that this is perhaps new.
Is there something different about the AI that requires that we actually say no AI in healthcare jobs? Like,
I'm just trying to get at what's his angle here. I mean, clearly he's been, I don't want to get into this, but he's been dragged around in the public a lot.
Contemplating his mortality more and regretting some of the...
I feel like this is a little bit of that, and we're not going to touch that other subject with a 10-foot pole, but he hasn't been...
I wasn't even going there.
Yeah.
I was just going, a life
mortality.
in business and making tough decisions and feeling like...
His reputation has come under question over the course of the last few years, and it seems like this is perhaps a motivation to appeal to the general public, and sort of mortality may be part of this too, as he's this white knight coming in to protect the general populace from this very sophisticated
so this
technology.
is like a PR rescue mission, maybe?
Again, that's how I read it from
you're
my
right.
armchair here, but you always have to think back to what is the motivation?
Boy, you're cynical, Paul.
What is his motivation?
Paul Lane.
What is his motivation to do this? Ultimately,
what's the Pope's motivation? I don't know. A little PR job there? No, I'm kidding. Maybe you're right. I don't know.
It was.
I just don't know how you coordinate, how you insulate, how you air gap a bunch of industries.
Wouldn't you argue the prevalence of all of Microsoft software probably took a lot of jobs out as well?
Yeah. Do you ever see? Sometimes internally, I show the chart of typist jobs.
Right.
Went from 1 million to 0.
Yep.
Nobody really laments that. I'm sure a lot of older people, especially who couldn't be retrained on what we now call MS Office, just a word processor, computer-based word processor. They were out of the labor force, but nobody laments it. In fact, Microsoft Office or the equivalent is universally viewed as like a miracle for those of us that worked in the previous era.
Yeah, so it seems a little counter to what his career was built upon. Maybe his argument is it's
no,
different.
You're right, though.
It's different this time.
I think that is the essence of it.
I guess that is.
No, you're right. He's the biggest destroyer of jobs probably alive.
I would think so.
Today. In a good way, though. It's creative.
A lot of productivity.
It's salutary destruction, if that doesn't.
So it just seems like a bit of a pivot from where he was.
I just thought it was weird
before. No, I'm with you. I'm glad that you pointed out. I'm going to talk here about the Mark Walter story because this sort of intersects many of my interests. He has an ownership stake in, he owned the Los Angeles Lakers. That sale is now in process, I believe, at $12.5 billion. So Mark Walter runs TWG Global, which has 2 insurance companies under its umbrella. And there has been all sorts of scrutiny on his business endeavors and how it relates to those businesses funding some of his investments in the most prominent franchises that you can think of on the sports front, the Lakers being one of them. And he's also the owner of the Dodgers and has some ownership stakes in Chelsea football and some other sports franchises as well. And what's been most scrutinized is he owns these 2 insurance companies under his TWG Global umbrella. There are premiums that are paid in to these insurers that the insurers have the ability to go out and invest the dollars that are overlaid by listeners like you and others out there. And there's always been a component that's been rising over the course of the last decade or so of private investment exposure for those premiums. Walter, again, all of this is alleged and needs to be sort of bared out, but he at least misrepresented how much of that money was being invested into these private investment endeavors. And it's just been a fascinating story to follow. He made about a 20% profit in a course of a year on his Los Angeles Lakers ownership stake. The Busses had sold a majority stake to him just about a year ago. But now Josh Kushner and Bob Iger are buying the Lakers for at $12.5 billion. And today, the reason that it's in the news is that TW Global has blasted the multi-pronged attacks against its holding company, saying that despite what has been reported, there has been no fraud in the company. So a story that I continue to follow. Yes.
No fraud. Fraud is a legal term, so I'm not sure that's going to satisfy his critics. I've not been following this closely. I shouldn't even have an opinion.
I have been following it very closely.
But when you use the word fraud, you use it advisedly.
I'm not. I haven't said that.
No, not you.
Oh, okay.
You were quoting somebody.
Yes, this is from.
You were quoting him.
TW Global.
Excuse me.
Yeah,
he signed off on it.
Has come out with this statement.
I'm just saying, if somebody said to me, "Well, I didn't defraud you," that's an awfully careful choice of words.
Very, very well.
That's
put.
sort of what I meant.
Exactly. Yeah, I think it is a very well. It's a specifically used phrase of fraud.
Yeah, it has legal meaning. They're using it, I suspect, because the statement was drafted or at least reviewed by lawyers in the legal sense.
But certainly the way they knew that they were eschewing at least regulatory requirements in terms of how investments should be set up within the private space. Mark is nodding.
If you're explaining yourself on this, not you, them.
Yeah.
You're in trouble.
So we'll continue to follow that story, but TW Global punching back at the claims of fraud and Mark Walters' business practices. Taking a look around at markets, Dow Jones off about 115 points, the S&P 500 off about 5, and the U.S. 10-year Treasury is sitting up 2 basis points at 4.66%. Nvidia is going to report earnings at the close of the bell. We'll have that and much more on our program first thing tomorrow morning. Thanks so much for joining us.